You know that feeling when you open a brown envelope and put it to one side for later. Then later turns into next week. Then next week turns into a month. And all the while a small unease sits in the back of your mind. If that sort of quiet money nudge helps you, it may be worth subscribing now. This channel is for people who want things explained plainly, without pressure and without fuss. If you like having a steady voice in your corner when the system gets murky, stay close. Because today we are talking about money many decent people leave sitting with HMRC far too long. Here is the heart of it. A tax refund is not a bonus and it is not a gift. It is your money coming back from the wrong place. And the theme running through this whole conversation is simple. It only truly helps you when it is back in your own account. So let me walk you through 6 very common ways people let that money drift and how to stop it. The first way this happens is painfully ordinary. A letter arrives, you skim it, and it sounds official enough to feel safe. You tell yourself HMRC will sort it if anything needs doing. That is exactly where many refunds go to sleep, not because you did anything silly, but because the system often expects you to take the next step. If you get a tax calculation letter, often called a P800, do not assume the job is done just because the letter exists. Sometimes the letter tells you that you can claim online. Sometimes it tells you a check will be sent automatically. Those are not the same thing, and mixing them up can cost you weeks or simply leave the matter hanging. So write this down in plain English. Open it, check it, claim it. If the letter says you can claim online, do that as soon as you can, because the online route is usually the quicker path. A bank transfer claim can arrive in about 5 working days, while asking for a check can take far longer. And if the letter says a check is coming automatically, then you know to watch the post rather than sit in uncertainty. The principle is simple. A refund is not real because HMRC has noticed it. It becomes real when it is actually moved into your life and can pay for shopping, heating, travel, or peace of mind. That is why the first rule is not to admire the letter. It is to finish the job. And if that feels useful, do subscribe so you never miss these small money-saving habits. The second way people lose time is through tax codes, especially when retirement income starts coming from more than one place. A private pension here, a small job there, maybe a state pension in the background. Nothing looks dramatic, yet the wrong code can quietly take too much bit by bit. By the time you notice, the money has been sitting with HMRC instead of with you. A lot of older people still think tax codes are some strange private language meant for experts. They are not. They are simply the instructions that tell payers how much tax to take. If those instructions are wrong, you can overpay without doing anything wrong at all. That is one reason your personal tax account matters more in later life than many people realize. Your phrase for this part is this: not corrected, not complete. In your personal tax account, you can check your tax code, claim a refund, see what tax you paid in earlier years, and review key details. That matters if you have had a job end, a pension start, a lump sum arrive, or a change after bereavement. When income changes, check the code rather than trusting that the old instructions still make sense. This is one of those quiet tasks that saves more than it seems to. 5 minutes looking at the right code can stop months of unnecessary deductions. The system is not personal. It only knows what it has been told. If you want calm guidance on these very British money tangles, you might like to subscribe and keep this channel within easy reach. The third way money gets stranded is when the refund feels too small to bother with. A bit of tax on savings interest, a small overpayment after pension income changed, a work expense you never followed up, or a deduction that seemed hardly worth the trouble. That is exactly how hundreds become thousands over a few years. HMRC rules have time limits, and that matters more than people think. For some overpayment claims, the clock can run for 4 years after the end of the relevant tax year. That sounds generous until life gets busy, someone falls ill, papers get misplaced, or you simply forget. Then one day the claim that once was easy becomes one you can no longer make in the normal way. So give this one a name you can remember: the 4-year clock. If tax was taken from savings interest and it should not have been, or if you think you paid too much in an earlier year, do not drift. Look back through the last few years calmly. Your job is not to become a tax detective. It is just to stop old money turning into forgotten money. Please do not talk yourself out of your own refund by saying it is only a little bit. A little bit is still your grocery money, your boiler service, your train fare to see family. And more than that, it is the habit that matters. If you know someone who always leaves these things till later, subscribing can be a useful way of building a steadier money routine. The fourth way this happens is one I see catch people just when they think they are finally getting access to their own pension. They take a lump sum, expecting relief. Then they look at the payment and think, hang on, where has all that tax gone? That shock is far more common than it should be. Let me put a real-life picture on it. Margaret is 67, recently widowed, careful with money, and not someone who spends on a whim. She took part of her pension pot to sort the roof and help her daughter with a deposit on a rented flat after a breakup. When the money arrived, the tax taken was far higher than she expected. She thought she had somehow done something wrong, so she waited and worried instead of claiming quickly. What often happens here is that a one-off or flexible pension withdrawal is taxed using an emergency approach. In plain English, the system can treat one payment as if it is going to repeat, which can mean too much tax comes off at first. There are specific routes to claim that back. If you took part of your pot but did not empty it, a form called P55 may be the right route, and if you emptied it, there are other forms, such as P50Z or P53Z, depending on the situation. So the phrase here is easy to remember. Emergency code, quick claim. Do not sit there feeling embarrassed or confused. This happens to sensible people every year, and it does not mean you were foolish. And if calm explanations like this save you from an expensive wait, why not subscribe so these little traps stop catching you unawares? The fifth way people let HMRC hold on to money is by mistaking a screen message for a completed payment. They log in, see that a refund is there, and feel relieved. Then nothing lands in the bank. Days pass, then weeks. And because the account once looked promising, they assume it must still be working its way through. This is where a very useful phrase comes in. Pending is not paid. If a self-assessment refund shows as pending, that means it has been created but still needs approval and payment. And there is another catch. If you have tax due in the next 45 days, HMRC may keep that refund back and set it against what you owe. That can be perfectly proper, but it means you should not count the money twice in your own plans. Here is the practical relief. Keep a simple refund trail. Write down the date you claimed, the route you used, the bank details you checked, and the point at which you expected movement. If you are waiting on a reply or a claim, HMRC also has an online service where you can check expected reply times for income tax and self-assessment matters. A little record like that stops you from floating in vague uncertainty. This matters because uncertainty is where money decisions go wrong. People delay paying something urgent because they think the refund is about to appear, or they become frightened and do nothing at all. If you value having a calm reminder that promised money is not the same as cleared money, subscribe and let me keep you company through it. The sixth way refunds slip away is through panic, urgency, and the horrible cleverness of modern scams. A text arrives saying you are due a rebate. An email looks official enough. A company offers to get your refund faster for a fee, as if your own money needs rescuing by a middleman. That is exactly the moment to slow down, not speed up. HMRC does send some text messages, and that is what makes this tricky. But there is a hard line you should remember. HMRC says it will not ask for personal or financial information in a text message, and if you request a self-assessment refund, the genuine confirmation text should not ask you for those details or send you off to a random payment page. So the phrase for this part is one I would love every viewer to keep by the phone. No links, no rush, no fee. If a text offers a refund in exchange for details, treat it as suspicious. You can report suspicious text to 60599 or forward scam material to HMRC's phishing address, then delete it. And if a refund company wants a cut of money you could claim yourself, read the small print very carefully before going near it. This is not about being frightened of technology. It is about refusing to be hurried when money is involved. Scammers want speed, confusion, and secrecy. If you think one calm voice in your week might help you pause before clicking, do subscribe, because that pause alone can save a great deal. Now, there is one more thought I want to add, because some people hear all this and say, perhaps it does not matter if the refund comes later. After all, they assume some interest will sort it out. That is not a good way to think about it. Even where repayment interest may apply in some cases, it is modest, and your own account usually serves your life far better than a delayed credit sitting in the system. Your refund pays no comfort while it is still theoretical. It does not lower the card bill, top up the gas, replace the tire, or give you breathing space before Christmas. And for many older households, breathing space matters just as much as the amount itself. That is why the central theme stays the same all the way through. It only counts when it lands. So let me give you a simple ritual you can actually use. Once a month, put the kettle on, sit down with your post, your pension notes, and your online account if you use one. Ask 3 questions and answer them honestly. Was too much taken? Have I claimed it? And has it actually reached my bank? If you are helping a parent, a partner, a brother, or a neighbor, those 3 questions can be a kindness. Not because they are incapable, but because money admin is tiring and the rules keep shifting. A second pair of eyes can spot the letter still unopened, the claim not finished, or the refund still marked as pending. That kind of gentle help saves pride as much as it saves money. And if you need a simple sentence to steady yourself, use this. A refund is not a favor. It is my money returning home. That one sentence stops a lot of the wobble. It reminds you that checking, claiming, and following up is not making a fuss. It is just looking after your own affairs with a bit of backbone. If this has brought one person to mind, perhaps an older sister, an old workmate, or the neighbor who always says she will sort it later, send it to them. Not as a lecture, just as a small act of care. Sometimes the most helpful thing we can give another person is a clear explanation at the right moment. I keep coming back to the same image when I think about tax refunds. It is like a coat left hanging in the wrong house after a long winter walk. You may well own it. You may even know exactly where it is. But while it is still hanging there, it is not warming your shoulders. Your money is much the same. While it sits in a tax account, on a pending screen, inside an unclaimed letter, or behind a scam message you have not yet questioned, it is not doing its job. Its job is to stand beside you, to take a bit of strain off an ordinary month and give you more steadiness than you had before. So do not be shy about calling it back. Open the letter, check the code, mind the 4-year clock, claim pension overpayments properly, do not trust pending, and never hand your details to a text. That is not being difficult. That is simply making sure your own coat is hanging where it belongs. And once your money is back where it belongs, something else returns with it. A bit more control, a bit more calm. And in times like these, that is worth holding on to.